Hey guys, Cousin Vinny coming to you from theclosingprint.com on 4/26 Sunday. In this video we'll cover the indices at all-time highs. Trend and VIX/VXX were depressed last week. The trend depressed just means buying volume outperformed selling volume. Breadth, no MAD or MDD distribution or accumulation days, but we did have up volume trumping down volume for the week. Currencies, US dollars consolidating at resistance on the monthly chart. Bonds are moving higher, and of course we'll cover setups in the IBD 50, the new list, filtering for 10E slow MACD setups. We'll start with a chart of the comp, which outperformed last week. It's outside of its upper Bollinger Band. We have a spinning top, and price continues to move higher. MACD is trending higher as well. Stow is in the caution zone, and the number of stocks trading above the 50-period moving average are at 68%. So note this is turning down. We'll keep an eye on that stat this week. Price is above the volume by price bar, so there's no overhead supply at all-time highs. We closed at 5,092.08, so that's a new record high for the comp. The spiders are also at highs. Note the long-legged doji. Volume was less than average, and Stow is in the caution zone. Note the price volume oscillator is moving lower while the index is moving higher. We're at highs, resistance, and we'll monitor this situation going into the week. The Dow Industrials continue to move sideways. Had three nice days on Wednesday, Thursday, Friday after a nice igniter bar Monday morning. On above average volume, MACD continues to trend, and slow Stow has yet to reach the overbought or caution zone. So the industrials look pretty good going into the week. Note this volume by price level up here, that prices could move above. Extending a trend line here, we're right at that trend line resistance. Looking at small caps, the Russell 2000, we're nearing these all-time highs. Note Bollinger Bands are starting to compress somewhat. Stow is getting towards the caution zone, and MACD is pretty much trendless, moving sideways. Monitoring the VIX this week, we are at lows and also in the caution zone, while the S&P 500 is trading at highs. The risk event indicator, VIX to VXV, is down in the caution zone as well, where we've seen previous highs occur. As we monitor sentiment this week, tick on the New York Stock Exchange is pretty much flattening out. Note how we ramped up in the first part of the year, and we've since been moving sideways, meandering, and oscillating around the 10 EMA. We are at the upper Bollinger Band, and we see NYMO moving down as well. Trend, we're pretty much in the sideways range here, having traded lower during the week. Tick Q on the NASDAQ, however, continues to move higher very briskly. We can see Bollinger Bands. The upper Bollinger Band is moving up, and the lower Bollinger Band is turning up as well, which usually indicates we could grind along the upper Bollinger Band over the weeks ahead. Trend Q on the NASDAQ is pretty much in the balanced zone as well. NAMO, the McClellan oscillator for the NASDAQ, is moving a little bit lower, so breadth is tapering off a bit on the NASDAQ, even though prices are trading at highs. The US dollar, as we indicated, is trading right along this resistance level that we saw back in the late 90s. Note the red zone here. Just keep an eye on the S&P 500. Note that in the 90s that the S&P 500 continued to move higher, even though the US dollar based and then moved higher, ultimately peaking out at 121.21 in 2001. So we could base out here and continue to move sideways on a daily chart. Slow stow is in the caution zone, and we continue to ramp up to all-time highs. And of course the US dollar on the daily chart. Note the triangle pattern. We're right at the 50 period moving average, the red line, and the 200 period is down below. We could test these lows, but remember on the monthly chart we are flagging at resistance. So not unusual to see this trade in this range from 96.70, 96.50 up to the highs at 171. Here's a chart of the Japanese yen as we cruise down here. For 2014, we've been moving sideways for the most part, most of 2015. Note the lows on the green area, which is the New York Stock Exchange, the NYA overlaid, and then the US dollar is the Elder Impulse chart. That when we made peaks in the yen, that usually corresponded with lows in the NYA. Here's a chart of copper. Commodities should continue to perform with the dollar moving sideways to slightly lower. Note that copper is sitting right on the 50 period moving average and closed above its 10 and its 20 period as well. Note the volume, slow stow is moving off the buy zone and MACD is crossing. So we have a 10E stow MACD set up on copper, which bodes well for the indices and the copper related industries such as the builders. Gold is going nowhere. It has been depressed by the 50 period moving average, the green line, and rejected by the volume by price bar that we see here at these levels overhead. Silver is also having a hard go of it, trading near lows. Note the volume by price congestion here. Slow stow is in the green zone, however, and MACD is trending down. So not seeing much here. The 10 period is overhead, so this is more of a short at this point. And the 10 is below the 20 and the 50. Light sweet crude, WTIC, breaking out of this range a few weeks ago, and the Kumo, we're at the 382 presently. We're watching the 1618 extension using these low pivot to high pivots, and then we have levels here off of these recent pivots at this low and this high that prices did pull back to the 382 and bounce. The 10 EMA is moving higher, so this is looking good for crude positions going into the week as well. The UWTI velocity shares 3 times long crude ETN. We've been trading this one for the last few weeks. Note the 10 EMA is holding price, and prices could conceivably get above the volume by price level. We think that's going to happen after it consolidates recent gains off of the lows of the range and moving sideways at that 382 level test on Wednesday. Note the volume and slow stows turning up. MACD is moving sideways. Here's a chart of TLT. Note we're holding the 100 period moving average, the orange line. We're above the 50 period, and the 10 EMA is just overhead. We're expecting or anticipating prices to continue to meander higher with the indices at all-time highs. So watch for TLT to continue to move higher. Stow is in the buy zone, and MACD is turning up as well. AGG is the Barclays Aggregate Bond Fund. This is what most bond funds use as their benchmark. We have VBTIX, Victor, Bravo, Tango, India, X-Ray, as our vehicle of choice for bonds. We're watching prices above the 10 EMA. Slow stow in the green zone, moving higher, and it looks like MACD is turning up. Note the histogram. Here is a new IBD 50 list, the weekend of April 25th. Note we've ranked by percent change. Note which industries are doing the best: pharmaceuticals, airlines, semiconductors, biotech, and so on down the list, and which are doing poorly as of the close on Friday. This just indicates what the performance was ranked by percent change on Friday close. There's a few new names on the list, namely CDK Global. We posted a chart on that on a blog. Check that out. We have a couple others. SNCR. Paycom is a carryover from last week. And we have Akamai Technologies, AKAM. I posted all three of those charts on the blog yesterday, so be sure to check that out. Note the blog address. This is case sensitive. theclosingprint.com/cb_blog. We talked about the FTSE and the BSE today. Yesterday we posted Akamai and the new IBD 50 list, where we covered CDK, Akamai. TSM is also new on the list. I forgot that one. As well as SNCR, Synchronos Technologies. So we'll be watching these names. So check back later. We will post charts for setups going into the week. I want to get outside with the kids. It's really nice out this spring day. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these, keeping track of the trades that we're looking at, whether they're high tight flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.